Welcome, everyone, to Daily Mortgage Rates Live with the Mortgage Calculator. We will get started here in just a few minutes. Just going to wait for us to go live on all of the different platforms, and then we will get into it. We put the chat up on the screen, so feel free to drop a comment there in the chat while we wait to go live. See, there's already some people in the chat there. Jason, Robert, Nick, Nicole, Michael, Mark, Adam, Richard. Good morning, everyone there in the chat. Julio, good morning to the Mortgage Calculator team. Hope everyone had a great weekend. Is ready to get into the week so we can check out the rates for today, see what the start of this week is going to be looking like. All right, it looks like we are live on all of the different platforms, so we can go ahead and get started. We'll take the chat off the screen and we will get into it. All right, so welcome everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we like to do here on this show every day is pull up the different rates for different programs, and then we do a deep dive into a different topic every day. So before we do our deep dive into second mortgages, aka HELOANs, which is our special topic for today, we will do what we do every morning, which is pull up the live rates and see what the market is looking like this week. So, Nick, why don't we go ahead and pull up our pricing tool and check out the pricing for today?
All right, let me go ahead and switch my screens and we will get started. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. If you would like a full loan estimate, please get with our team. We have over 300 licensed loan officers in 23 states for primary and second homes, and we can do our business purpose DSCR loans in 44 states. So our pricing tool today will show us the general rates and APRs for our programs. It is May 22nd, just after 11 a.m. Eastern, so all our general programs are live. If you would like a full loan estimate breakdown of all the fees that go into the APR, please get with one of our team members. But let's use our tool to check out the general rates this morning. So for all of our demos today, we'll use an estimated loan amount of $400,000, an LTV of 80% loan to value. That means 80% loan, 20% down payment. We will tell the computer to find the best price or the best rate at 99 price. That means one discount point in cost. Most of our customers are asking to buy down the rate a little bit. So that's typically the most common request we have right now. And we'll compare our loan programs. We'll first check out conforming conventional. Then we'll compare that to our FHA rates. And then we'll check out our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs. Now, we don't do VA live. We do have VA programs for our eligible service active members and vets, and we appreciate their service, but not everybody is, so we don't do that live. And same with USDA, that's only for properties that are in an eligible area. So if you do happen to be shopping in one of those areas, please let us know. We'd be happy to quote it, but not everybody is, so we don't do that live either. So we'll start with conforming conventional. We'll set up our basic scenario, a purchase, 30-year fixed loan standard, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. And for all of our demos today, we'll use an estimated FICO of 760 and an estimated debt to income ratio of 40%. So with these basic settings, let's check out our conventional rates this morning. So looks like it went up a tad from last week. Right now we have a 6.75 for one discount point and cost, and a final APR of 6.917. So last week the APRs were around 6.6, 6.8. Now they're a little bit higher. So we like to do this show so we can track it over time. Now, if for any reason our customer doesn't qualify for conventional or wants to compare options, typically the next option that we compare is for FHA. So if we set up the same scenario, we can quickly switch this to FHA. FHA does allow a little more leniency on some credit items as well as a higher debt to income ratio. So typically that's the next option. So we'll keep everything else exactly the same. That way we can compare APRs across the programs and compare them apples to apples. So with everything else the same, let's check out our FHA rates this morning. So it looks like those have gone up a little bit as well. But in this scenario, just like before, actually a little bit cheaper. So in this case, a 6.125 rate is the best option for 0.75 discount points and cost, and a final APR of 6.709. So remember the conventional was 6.9. Here, FHA in this scenario, for our borrower with this exact case, FHA is actually a little bit cheaper on the APR when we compare it, even with the upfront mortgage insurance and yearly mortgage insurance. So definitely recommend those out there shopping. Definitely compare FHA with the conventional. Might be actually a little bit cheaper for FHA. Now, if for any reason our customer doesn't qualify for conventional or FHA, many other banks or lenders don't have any other options. But that's where we love to come in and specialize here at the Mortgage Calculator with our 5,000 additional loan programs under expanded guidelines, aka non-QM, where we can use alternative income documentation. So we'll keep everything else set exactly the same, but when we switch to non-QM, we get one new option that pops up, which is our income verification option. So full doc is what we use for FHA and conventional. That means 2 years of tax returns, what most people are used to. So typically we would choose expanded guidelines non-QM to choose one of these other options. We have asset-related programs, we have business bank statement programs, we have our investor DSCR programs we'll go over here in a minute. We have personal bank statement programs, we have VOE programs, 1099 programs, P&L programs, we have no income at all programs. But the most popular by far for non-QM is our personal bank statement 12-month program. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, have various write-offs and other things going on, which may cause them to either not qualify at all or not qualify for as much income as they wish to get the home they want. So in this case, we're going to, instead of using tax returns, we're just simply going to use the last 12 months of bank statements to determine a debt to income ratio of 40% in this demo using bank statements rather than their tax returns. So most self-employed borrowers, when we're looking at their cash in the bank, have good cash flow and therefore will now qualify where they couldn't before, or will qualify for much more income and a higher loan amount to get that home of their dreams. So these are great solutions for our borrowers that get stuck. The rates will be a touch higher here, but let's check out our bank statement options this morning. So typically the rates are a touch higher here, a little bit up 7.25 for one discount point in cost and a final APR of 7.317. So remember the conventional was just under 7, 6.9 something. Now we can use bank statements, totally different option for just a little bit more cost there. 7.317 is less than a half a point higher in APR for our borrower to solve their problem. So we love to present these solutions, and we have dozens, if not hundreds of variations of this program. If we scroll down here, there are different options using bank statements where we may also allow things like a credit event, like a foreclosure or bankruptcy or other things like that. So there's tons of different options here. Please get with our team and they'll be happy to find the one that fits best for you. Now, before we go into Jose's deep dive onto second mortgages, which are a whole different ballgame, we always want to do the live pricing for investment properties. So we love to work with investors, whether you're a first-time investor or you have dozens of investment properties, we have some great options. So let's set up the same scenario here, 80% loan to value, 20% down payment. And we're going to compare our conforming investment property conventional programs with our expanded guidelines, aka non-QM. Remember, FHA, VA, and USDA are not eligible for investment properties. So we can quickly compare our two options here. So first we'll select conforming. Everything else will stay the exact same as before. All we've changed is the occupancy to investment. So let's check out our investment property rates this morning. So the best option here at the top, 7.125 rate for 3.5 discount points and costs, and a final APR of 7.375. So obviously more cost here than a primary home for an investment property. And you'll see the computer was unable to find an option at 1 discount point in cost because the conventional programs have added additional loan level price adjustments, aka pricing penalties for investment properties. So the best option the computer found here is actually quite expensive. So most of our investors would like alternative options. Unfortunately, with conventional, there isn't that really alternative. All of these options are going to have a high discount point cost, and even if we go up higher in the rate. So we often recommend our investors to compare these conventional options with our non-QM, which we think are superior in most cases. So if we slide this up to the same, set investment property, and for our final demo, we set expanded guidelines, aka non-QM, so we can compare across. And we have a couple options that we do have to select now. First, the income verification, our most popular program for investment properties by far, and our flagship program here at the Mortgage Calculator is our DSCR program. That stands for Debt Service Coverage Ratio. And that's because it doesn't actually require any income or employment from the borrower. We're simply going to use the estimated rental income from the property to determine a debt service coverage ratio. If the estimated rental income from the property can cover the mortgage expenses for the mortgage we're proposing here, the DSCR ratio is 1.00 or higher, aka the property cash flows on a monthly basis. Even if the property doesn't cash flow on a monthly basis, that's a ratio of under 1.00. Many other programs don't have options for that, but we have quite a bit of options for under 1 DSCR as well. So for our demo today, I'm going to just remove this so we can see all the different options, but we do have options for various ratios there. And the final thing we must set is our prepayment penalty. Standard on all of our non-QM investment property programs is 3 years, is what we always use for the standard option. We can choose 0 if we'd like. That will limit our loan programs and cost more money. And we can choose 5 years as well, but not all loan programs allow a 5-year prepay. When they do, it saves us a little money. But for our demos, we always choose 3 years because that is the most common option. So with these basic settings, let's check out our DSCR rates this morning. And you see here, good option, 7.75 rate, so a little bit higher rate, but we've solved the discount points, 0.725 discount points in cost, and the final APR of 7.807. So you see that final cost to our borrower, just a little bit higher, but for our investors out here, this solves the problem, saves them cash out of pocket so they can invest in other properties. And most importantly, as long as the property cash flows, most investors don't mind a little bit higher rate. So these are typically the programs that our investors select rather than conventional. So definitely recommend if you're looking at investment properties, definitely check out the DSCR options. There's a ton of different programs that we have for different ratios you see here. We have options with different prepayment penalties, which you'll see pop up. We have options that may allow short-term rental income. So some of these at the higher rates may allow foreclosures, bankruptcies, short-term rental income, all kinds of different variations. So please get with our team and they'll find which of these hundreds of programs will work best for you. Now, let me go ahead and introduce our deep dive topic for today. Now that we've gone through the live rates, had Jose working in the other screens there on our demos for today for second mortgage HELOAN. So this is an interesting topic. This is kind of all the new rage right now since HELOCs are quite expensive. A HELOC is a home equity line of credit. That is not a HELOAN. A HELOAN here is a fixed rate second mortgage, different than a variable rate, different than a HELOC, totally different ball game. But these are the more popular products now coming in for a second lien on a home rather than a HELOC because of the rates market that we're in right now, right? Where rates are going a little bit crazy. Definitely recommend our borrowers check these out if they're looking at a second mortgage. These are actually probably, in most cases, going to be better for our borrowers. So, Jose, if you got your demo set up, let's go ahead and have you talk a little bit more about the fixed rate second mortgage.
Good morning, everybody. Thank you for joining us, Daily Rates Live with the Mortgage Calculator. As Nick was stating, HELOANs are very popular now because not only their rates are lower than the HELOCs, they are also a fixed rate, which will allow your investor and your primary and second homeowner to plan a little bit better. And also, very importantly, they are also available for investors and are available full doc and bank statement. That is the key right there, right? Bank statement option, second mortgages, and investor friendly as well. So this does allow us to reach out to those borrowers or prospective borrowers that don't want to touch that 3% interest rate that they have on the first, but do not also want the volatility of the HELOC with all of the short-term volatility that's happening right now. There's a lot of factors we're really not going to be able to control. So, especially for the investors that are looking at a set amount, they need to plan their rent schedules. They want the fixed rate second mortgage, especially with the bank statement option thrown in there. So, keep in mind, HELOAN, there is the HE in there, but this, that's for home equity, but that has nothing to do with the HELOC. So, my first example that I have here is for a full doc primary 90% CLTV. I'll wait till that's queued up for us here. All right. Full doc primary residence 90% CLTV. Now, 90% is the maximum CLTV for this program, which is another difference between this option of a closed-end second and the HELOC, which is an open-end second, is that the HELOC will go to a higher CLTV for purchases and stuff than will this option. This is 90%, HELOC above 90%. So here, but this is where you can see the differences here. Whereas this program is 10.875 with a lender credit, and you can actually buy it down to 9.875 at a cost of just about 2 points is where you are right there. So good option here, 90% CLTV, full doc primary. Right? So this is 90, and here's the same option at 80. So you do see that 9.99 offers us a lender credit, whereas over here you're at 10.875 for the extra 10% LTV, and 9.5% is your lowest rate option. Very inexpensive there at that 9.5% is costing about a half a point, but that is the lowest rate that they offered in their rate stack. So now we have our bank statement option. Here's where it gets very interesting for this loan amount. Bank statement option, 85% CLTV, right? So here we have 10.875%, so slightly higher at a little bit lower LTV, but still 85%. So 10.875 with a lender credit, and you can buy it down to 9.875. Keep in mind for the bank statement option, obviously it is for self-employed borrowers only, and they are required to be in business for at least 2 years, even though you only have to provide the last 12 months of the business bank statements. It is minimum 2 year in business. So this is our 85%. And this is our 80% primary 80% CLTV bank statement option. And you do see now, once we get to the 80% LTV, rate is even better, 10.25 actually with a lender credit, and 9.5% is your lowest rate option. Again, not even 1 point charge there. That is the lowest rate in their rate stack. And now it gets even more interesting because now we're here with our investors, right? This is where it gets a little bit more challenging with the HELOCs for sure. Not every HELOC option out there is available to investors. So this HELOAN, this is our max 80% CLTV option. And also no prepayment penalty is applicable on these HELOANs. So 12.375 is offering a lender credit, and your lowest rate option 11.75 at a cost of about zero point 0.4 points. And what you are waiting for are bank statement investment property option. Now, this is 75% CLTV max. At 12.5%, that is the par rate, and you can buy it down to 11.75 at about zero point 0.4 points on that cost. So, multitude of options here with our bank statement and our full doc HELOAN options for for investors and for primary homeowners and second homes.
All right. I don't see any questions on these, really. So I think we're good.
Yeah, definitely something to take advantage of, though. And I think a lot of people learned a lot from that, Jose. A lot of different programs. Probably a lot of people didn't know you could do bank statements, investment properties. So definitely great programs there. Remember, if you would like a full quote on your scenario, like one of the ones that Jose pulled up, you can visit us at themortgagecalculator.com. We can pair you up with one of our 320 loan officers all across the country who can consult you through these programs. Now, we do this show every day at 11 a.m. Eastern time, where we go through the live rates and then do a different deep dive into a topic every day, like we did with HELOANs today. So we hope to see everybody tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great Monday. Take care.
Thanks, everybody.
Thank you, everybody.